what a week this was. And Guy Adami, I am not going to take anything away from a Dow that rose nearly 2,000 points. It's better for most people's portfolios than it falling 2,000 points. But I believe we're going to be going to Eamon. We're going to Eamon? Oh, you have time now to think about that question.
Sure, let's go to Eamon.
Which is good news. All right. Let's go right now to Eamon Javers, who's at the White House with more news following that president's news conference, which certainly moved markets. Eamon.
Yeah, boy, did it. I mean, it was about a 1,000-point spike while the president was speaking. Traders clearly liked what they heard. The president taking a very CEO-focused approach here, bringing up the CEOs of Target and Walgreens and others, name-checking Google. The president here, I thought, Brian, taking a much different tone in terms of the coronavirus than we've seen from him in recent weeks. He's tended to sort of minimize the danger of this over the past couple of weeks, yet today he said something different. Here's what he said.
In the coming weeks, we will all have to make changes and sacrifices, but these short-term sacrifices will produce long-term gain. And again, I've said we're learning a lot for the future, and future problems like this, or worse, it could get worse. The next 8 weeks are critical.
So the president here declaring a national emergency. That frees up tens of billions of dollars in federal aid to go to the affected areas. And it also unleashes some regulatory actions that the president cited, including clearing out red tape for doctors and hospitals that are trying to respond to this in real time. The president taking here action much stronger than he predicted even yesterday when he was asked by a reporter if he was going to do this. He said, well, I might do some of the minor things. I'll do it if I have to do it. Today, he clearly felt he had to do it, and he did, Brian.
Yeah, he certainly did, and a lot of CEOs were there, Eamon, and the market either loved it or had covered. Eamon Javers at the White House, thank you very much. Now, Guy Adami, you had a minute to think about that question. Are you a buyer of today's?
Well, I was locked into Eamon because I'm a big fan of EJ, as you know. But in terms of, listen, yes, it was an important day for the stock market. And last night, if you're around 10:30, 11 p.m., the S&P futures actually traded down to levels that we had talked about, believe it or not, that 2350 level. So you can take some solace in that and the fact that the market did rally. I think that's a really good thing. It's an encouraging thing. And I think that press conference addressed a lot of the health concerns and what we were doing about it that people wanted to hear. I think that's great. What concerns me, and again, it was a great day for the stock market, absolutely. What concerns me, what has concerned me, and what will continue to concern me is the unprecedented volatility in the bond market. 10-year yields at one point this week were 34 basis points or so, and today they closed, I think, either side of 1%. I mean, that is a historic move by any stretch of the imagination.
Yeah, look, I agree with you. What had me most concerned on whenever the day we hit 31 basis points on the 10-year note is the bond market is telling us something, not just as it often can, but something awful. And I'm not sure the move to 31 is appropriate. I'm not sure where we're supposed to be right now. I think that's what it comes down to. Certainly, we've seen a relative value trade into the U.S. as this crisis has moved on. Just back to the technical elements of today. 7% on the S&P in 25 minutes into the close. That just doesn't make sense to me. That's not suddenly people getting really excited off of that speech, with all due respect to the speech. It's nice to hear the president take, I think, the authoritative action that he did today, and I think that's great news for the country. I think 7% in 25 minutes on the S&P is a bit concerning. It doesn't mean that you should feel that this was nothing. I think there was a lot of short covering to come. I think certainly we talk about algos and machines all the time. I think the most important thing, you saw that good companies today found a way back. And what was interesting is then you saw some companies that may have been some of the frothier names before we started to sell off that looks like they may be the victim of margin calls that doesn't have a lot of money that can come in after them. There's a couple asset classes. There's a couple big stocks that did that, and you can short through that. So I think the market really needs to follow.
Actually, Tim, you brought up a really good point about margin calls. To me, what the last 2 days have really been about is this type of deleveraging type of action where somebody is a forced seller or maybe today a forced buyer. The liquidity in the market is almost absent, so you get these massive moves up and down. So what does that mean for you at home? So if you're at home and you're saying, you know what, I didn't want to sell the bottom, I've got an up 10% today, remember that some of the biggest rallies that we have, in fact, I think about 7 or 8 of the largest rallies in the Dow have happened during bear markets.
That's right.
So
no,
take
I tweeted that out in 08 and 09. We had some of the biggest up days in history were in 08 and 09. And I think if my memory serves me, in 2000 and 2001 as well. The VIX, by the way, ended at 58, which is still higher, Guy, than 2 days ago. And it's not like bond yields signaled the all clear.
That's, again, the VIX at 58 is significantly lower than it's been this week, but it's still the VIX at 58, which if we had talked about that 2 months ago, you would have looked at me with your incredulously, correctly, by the way. So, again, that's telling a different tale. I don't want to dismiss, I don't think any of us are dismissing the importance of the market finding its footing today. I think that was very encouraging, especially at last night. As I mentioned, 11 o'clock, it didn't look that way. And at points today where it really looked like it was going to give up the ghost. That's the good news. In my opinion, the bad news is this bond market volatility is not a healthy thing. The bond market, whatever rates they need to stabilize somewhere, and Tim is right, 31 basis points in 10-year probably wasn't right, and maybe 1% now isn't, but it needs to find its footing, and it needs to stop moving to the levels that we're seeing.
So let me give you the silver lining that's out there, though. So what we know, what works to solve the health crisis is containment, is quarantine. Whether we like it or not, whether it's mandated by the government, where it doesn't look like it's going to be, this country is shutting down. They shut down Disneyland. They shut down Disney World. Airlines are shut down. Broadway shut down. So we are self-quarantining. So we are moving in that direction. I do think some of the bounce off of last night's low was the market saying, OK, we are moving in that direction. It's going to hurt. It's not going to be great. But that's a positive development.
Sure. How important is Monday, Tim?
I think Monday's part of it. I don't expect that Monday gets us to the other side. Remember, a lot of the things that we're wrestling with, especially for those like me that don't expect this to be a V-shaped recovery, is that we still are trying to figure out where credit is. We are still trying to understand where companies that, first of all, we heard about Boeing getting the down. I mean, I'm not worried about Boeing's balance sheet. Maybe I'll say something different in 6 months, but based upon I think the quality of the management team and the quality of their core business, their leverage has adjusted quickly. But there are companies in sectors, especially in the industrial space, that I think the market is still waiting to call judgment on. And I think if you think about earnings, the biggest problem that comes out of a recession is a credit crisis, because earnings growth doesn't happen, and ultimately you get this spread widening that becomes dangerous for the market. So Monday is an important day, because I think Monday our country is going to have a better sense of where we are with this virus. Every day brings a little bit more clarity. At least clarity of the unknown. Again, the certainty is that we're not certain, but we're more certain that we're not certain than we were yesterday. People are taking this seriously, as they should be. And I think that level of clarity on where we have to get to as a country is very important.
Okay, good stuff there. We're going to come back to the macro market discussion, but we've got a very special guest to bring in right now, and that is the president of the New York Stock Exchange, Stacey Cunningham. Stacey, we appreciate you joining us here on CNBC on what was just an incredible week. First, I'm just going to be direct. Any chance the New York Stock Exchange shuts down?
We don't have plans to shut down the New York Stock Exchange. We're very focused on making sure we can keep the floor open for a number of reasons. First of all, it is a symbol of the strength and resiliency of our economy, and so we really want to make sure that we continue to give that presence and confidence to investors and the public more broadly. And second, our stocks trade better when we apply human judgment. We've been using that mechanism a lot this week, and we just saw a few minutes ago, we had a number of stocks in the oil sector that at the very last seconds of the day had massive buy imbalances based on the news, the president's announcement. And so we really brought that community together to find a price level where we can offset that imbalance.
You know, given that there's some people I've talked to that are having trouble in big banks finding price discovery because people are working remotely, computers aren't working, or they're slow at home, and there are bid-ask spreads, particularly in the bond market and some of these structured products and derivatives. Very easy to buy and sell single stocks. We understand that, Stacey, but I know you're much more knowledgeable about this than I am. Do you think the market itself, not the NYSE, but the market maybe needs to take a pause to make sure that everything is up and running? Because these 1,000, 2,000 point moves on a daily basis, Stacey, we've all been doing this a long time. These are bizarre.
They're certainly unusual price moves. It's important that the markets stay open, though. So we can take a pause for 15 minutes. We did that twice this week, and I think those were very appropriate and very helpful to the market. But taking a long-term stoppage of trading certainly does not send a strong signal to investors. That's not who we are. We need to be able to give people the opportunity to access their money. You did see some shifts in liquidity, especially where there was a lack of liquidity sometimes in the fixed income space. You saw many clients using, many investors moving toward fixed income ETFs because the liquidity that they were able to find there. So I think you're going to see investors looking for liquidity across the board and trying to determine what products they have more success trading and investing in. But I don't think we're going to see the markets close, and I think it would be the wrong measure to take.
Hey, Stacy, it's Tim Seymour. A pleasure to have you on. And I guess my question is around liquidity, but extending that and even to today. So when an Intel moves 13% in 25 minutes or the S&P moves 77% in 25 minutes, what, from the exchange's perspective, I know you're not a floor trader. You're an executive. You run this thing. But what's happening down there? And you have a great view. And I'm just curious because today was extraordinary.
Yeah, I mean, today's extraordinary. I think a lot of that has to do with evolutions we've seen in the market over time. So we see markets are much more fragmented today. Markets are also much more automated. People are getting information very, very quickly and reacting to signals they're seeing in the market. So you see movements happen much more quickly. That's part of why we introduced circuit breakers, not just at the market-wide level that we used a couple times this week, but also at single stock levels, so that when there is a rapid stock movement of 10%, we can again take a pause and centralize liquidity so that it can back to one place and really focus on price discovery. We've been using a lot of the tools we have in the toolkit this week, and they've all worked the way they're supposed to. That said, we want to make sure that investors understand and focus on the long term. If investors are seeing these massive price moves during the day and taking those as opportunities or moments opportunities to invest or moments to panic, I think they really would be better off focusing on the long term.
Just quickly going back to safety, obviously you talked about the importance of people, and people are the most important thing out there, especially we're all thinking about our families. We're here at the NASDAQ, you're down there, there's people moving around, we have CNBC crew as well. What steps have you taken to make sure that everybody coming into that building is as protected as possible?
So we've done a number of things already, and we're expanding those next week as well. We've restricted guest access on the trading floor. So the people that are on the floor now are people that support trading operations on the trading floor, just so that it increases the likelihood of the people on the floor being protected from an outbreak. We've also asked the employees at the New York Stock Exchange that don't support floor functions, but that work in the New York Stock Exchange building, to work from home. So we're just limiting the number of people coming into the building. We've increased our cleaning. In fact, right across the way, we have a deep cleaning team that's working through to make sure the floor is sanitized. We're running through a number of different measures and segregation so that we can keep the floor open. And then we have contingency plans in place in case we were to have an issue, so we could reopen very, very quickly for trading the next day. And also, you know, we have plans where we can move and trade completely remotely and electronically. We don't plan to use them right now because we really do think it's critical to keep the markets open, not just for investors, but really for public, to show that strength and resilience. And you know, I just have to say, markets have been challenged this week, but so have Americans. And we're trying to figure out how to process information, how to protect ourselves and take precautions. We're doing it here in our markets. You use the tools we have. We're doing it here on the trading floor by trying to protect the people that come to work every day. And Americans are doing it all over as they prepare for what they're not quite sure how the next few weeks will unfold.
Stacy, you guys have done a wonderful job. Congratulations, because being open, I think, does send the right message. But in terms of your business specifically, the ability to bring clients down, does this potentially hurt your listing business, or does it just sort of temporarily cause a bit of a pause in that?
Yeah, I will say that one of the things we've focused on with our listed companies, they're all going through a period of uncertainty right now as they're trying to figure out how to protect their own employees. We can leverage our network to help them with that. We held a conference call today with Scott Gottlieb, who I know is a friend of CNBC. He talked to our listed companies about the things they should be thinking about and doing. Bringing that community together to share best practices is certainly one of the values that we can provide to our listed companies. And we bring them together during times like this so they can share best practices and figure out how to navigate uncertain waters. With respect to IPOs, certainly the markets that are not the most conducive to IPOs right now, not just because of the volatility in the market, but because of the concerns around meeting with investors. So many companies that have been considering an IPO are putting that on pause. ultimately, we'll be able to point to how our market performs better during times of volatility, and that becomes something that we can talk to companies about when they are considering listing at the right time. But that's, I think that there's plenty of time for that.
Stacey Cunningham, president of the New York Stock Exchange. Stacey, we do appreciate you joining us on what was a big day, a big week. Certainly wishing you and all the people down there to be as safe as possible. Have a good weekend. It's been a crazy week.
Thank you.
Stacey, thank you very much.
You too.